We move on Morning Live. Now, as an entrepreneur, establishing and maintaining a strong credit profile is vital for accessing capital, securing favorable loan terms, and achieving long-term business growth. At the heart of this financial foundation lies your credit rating, a 3-digit score that can make or break your business financial future. So we'll be having this interview shortly, but for now, are we going to the kitchen first or going to the interview?
We can't keep Mr. Mwambazi here for a long time. Good morning to you.
All right.
Good morning.
So,
how are you doing?
Fine, thank you.
Yeah.
Thank you.
So Patricia speaks about credit rating, and first of all, let's understand this. You know, what is credit rating?
Credit rating basically is the assessment of the credit worthiness of a business or a country.
Okay.
Yes.
Why is it important to, understand credit rating at a personal level and at a, macro level?
All right. So you must basically understand it that credit rating is a major determining factor in sourcing international capital, even local capital, by the way. So it is that vital.
To a business, how is it important to a business, especially for small business owners?
Okay, so for small business owners, obviously the projection or the idea is to grow the business. Now, obviously, if we're going to talk about any instrument that is going to assist you to source cheaper capital, obviously credit rating is very crucial.
What then would you call bad credit ratings?
Okay, so the bad credit ratings are those that obviously the reports that obviously are, below average.
Okay.
The reports that suggest that you are likely to default on your debt obligations.
Okay.
Yes.
So that makes it a bad credit rating.
Exactly.
And I'm assuming this then begins to affect your potential to access finance.
Exactly.
Can you walk us through the process of establishing business credit, for instance?
Okay, so obviously by that I assume you mean the procedures in which you can get a credit report. Obviously from company to company it does differ, but for us with ICRA, we have a very simple process.
Okay.
All right, but obviously I must also mention that yes, the processes may differ from company to company, but the methodologies of credit ratings are very similar, in the sense that it's a very regulated industry. So you find that there's certain international standards that we all have to follow. In short, my report shouldn't be so much different from the other credit rating reports agencies report. So in case of major differences, we have an obligation to really explain where the difference could be coming from.
Okay.
And just to help us understand, how personal credit ratings and business credit ratings differ.
Okay, so basically for personal credit ratings, you're looking at an individual portfolio, where an individual is trying to get maybe access to a mortgage, a personal loan, and just a personal credit. And then on the business credit rating, you're looking at a business trying to access credit lines, a loan, and just funding for their expansion.
Yeah, and then obviously, how do credit ratings then influence supplier and vendor, relationships?
Okay, so obviously that's to say that if you've got a very good credit score, it's very easy for you to come up with, to go out there in the market and obviously influence big companies to be supplying you. Obviously, you get priority preference in terms of dealing with your company, and obviously every business wants that. And obviously it also helps you to negotiate terms in terms of payment terms, payment schedules, and furthermore it also helps you just negotiate better terms overall with your suppliers.
Okay.
What are the common mistakes that businesses make when managing their credit?
Okay, so some of them that I've come to notice basically is just poor management of dates. You delay to pay your loans, and obviously sometimes defaulting on loans, and obviously just some could be as reckless as just not keeping your financial records intact. And obviously when a company like ours pops up and we're asking for certain information, it's just not available. So you find that that in itself could give you a very bad record.
Okay.
Yeah.
So how can then businesses improve their credit ratings? I'm looking at a firm that is already established, but they're looking to improve their credit ratings. What can they do?
All right. Obviously, I tell businesses always, obviously, look, if you're going to expand and then you're going to go out there and seek finances for your expansion, always diversify. Don't always go knocking from the same sources to get your money, because there could be cheaper monies out there. And when you get cheaper monies for your business expansion, obviously that starts to help your business in so many ways. Yeah.
Financial decisions, though. Why should an entrepreneur, for instance, be thinking, before making a financial decision, be thinking, credit ratings?
All right, look, it all goes back to the same thing that I've been trying to stress.
Especially for a sole trader. It's my money.
Yeah.
Yeah, that's the notion. This is my money.
Yeah.
So I can use it or invest it in any way I feel like. Why should it be, important for this sole trader to always have credit ratings at the back of their mind before they make a financial decision?
All right, look, the whole concept of credit rating is now becoming very popular, especially in this part of the world, Africa. We're beginning to realize that some of the reasons some of our capital is very expensive is when, if you look at, say, our banks, they also go out there to source capital. The money they're getting is because of maybe our country's bad rating, sovereign rating. They're getting very expensive capital. Then they're coming to us, the business people here, and they're giving us the same money at very high interest rates. So now you find that now if, say, for example, you come to entities such as ours that are able to just focus on your business without really considering the country's credit rating, we say, look, this business in this environment is performing well. You're able now to go out there and use it for the benefit of your business.
Okay.
Yes.
So meaning that if I want to assess my credit worthiness, I can come to, for instance, your company.
Yes.
Then you can evaluate
exactly
whether I'm credit worthy on the market.
Exactly. We don't just necessarily look at, because we do domestic ratings as well. So we will focus on the fact that, look, companies see what is their strengths in the same Zambian environment, but what is their strengths? And we're able to highlight that. And even though, just because you're doing very well here, we don't really have to factor in that Zambia probably has defaulted on loan repayments, and obviously Zambia is not doing too well in terms of rating. We will give you a credit score based on how your company is performing in this environment.
So I mean, you keep talking about defaulting, and what comes to my mind is Zambia.
Yeah.
At some point we're told, credit rating has gone high, credit rating has gone down.
Yeah.
Does that affect such kind of pronouncements? Do they affect small businesses that are operating within the country?
Of course, like I said,
if the country is failing, my business is booming, does it affect me accessing funds from, for argument's sake, Chinese people, for instance?
Yeah, obviously, like I said, you see, look, if say Zambia's credit rating at the moment is, right now it's been upgraded, but before the upgrade, you find that if any Zambian financial institution goes out there, or the Zambian government goes out there to source funding for, a project, for projects like roads and all these things, or maybe just for our financial our financial institutions go out there to source funds, they'll be given the capital, but at a very high interest rate because of our rating. So you find, yeah, it does affect.
Even though as an individual company, your ratings are good, you're doing fine.
This is why it's also
basically just looking for expansion.
This is why it's also important to deal with domestic credit rating agencies such as ourselves, because for us, we'll be able to tell the investor out there to say, look, yes, the country's the country's rating is this, but if you look at this company within this environment, they're doing very well.
So what words would you have for entrepreneurs looking to establish or improve their credit ratings?
Okay, basically, look, they need to do a lot of, consultation. Okay, they need to do, especially say with financial advisors, licensed financial advisors, accountants, and obviously institutions like ourselves. Because once we give you our report, it will be well detailed. You'll be able to see where your weaknesses are as an organization, to a point where you can now zero in and start working on those improvements.
Yeah. How expensive is it to have your firm, rated?
It also depends on the size of your firm. Yeah. Like, I can give you an example. If we're going to rate maybe a financial institution in this country, if they only have, say, presence here in Zambia, it becomes an easier conversation to have, and obviously just look at the whole business. But if they're going to have presence outside Zambia, that becomes a bit more tedious. Obviously, expect them to pay more. Yeah.
All right, let's end our conversation by you sharing a message to that person that is still not yet decided. Should I have my firm rated or not?
Okay.
And that person who's still trying to think, is this even important for a firm like mine? What word would you have them as before we let you go?
Okay, look, so whether you're a small business here in Zambia or you're a big business out there, say like Microsoft, the idea is everybody wants to expand. Now, if you want to give your business that chance, that opportunity to expand, credit rating is a way to go. So, look, you're going to be looking at accessing cheaper capital. It's also good for your brand, in terms of reputation. If you've got a good credit score, obviously you're going to attract, more confidence with your clients, and obviously that increases your client base. So it's very important to have a good credit score.
Well, we're speaking to David Mwambazi, Director, Africa Operations at the International Credit Ratings Agency, ICRA, and we're trying to help us understand this particular subject and why it's important at an individual level, but at the same time, at a business level, why it's important to, ensure that you've got a very good credit score, all right, as you seek to expand and open more branches within or outside the country. So it's important before you make that financial decision that you need to have at the back of your mind that you need to have a good, to build a good credit score.